In this video, I'm going to show you 3 simple steps that you need to prioritize in order to become profitable. So let's just jump straight in, right? The best piece of advice that I can give you with regards to profitable trading is getting proficient at identifying high probability conditions. So what do I mean by that? Pretty much, right? We'll use a daily power of 3 as an example. So you want to gauge or understand when it is likely that the next following daily candle is going to print either higher or lower. Okay, so the daily candle is going to look something like this or something like that. Okay, and with that, the reason why we do that is because once you've identified a high probability expansion, it's very simple to get behind the move. I.e., if you're looking for a sell, right? If you're looking for the day to expand bearish, then you're going to look for a short, right? That you're not going to get caught up in whether you're looking for longs, shorts, whatever position, right? You're not going to get caught up in catching the wrong direction because you're looking to trade the higher time frame expansion. Now, also another question is, how do you actually get good at doing this? Number one, chart experience. You can't cheat chart experience. You can't really fast forward the market IQ, right? You have to practice, you have to get the reps in. But number two, something that people don't really do is actually document these. So inside of Notion, for me, I'll actually go ahead and I'll just show you what my Notion document looks like. So at the top here, it will say like Euro USD. Then it will have a picture of the chart on the monthly, and then it will have something written down there. Then it will have the chart on the weekly, have something written there, chart on the daily, have something written there, so on and so forth. 4 hour, 1 hour. I know it sounds long, but these are the things that you need to do to actually go ahead and become good at finding and identifying high probability conditions. And another thing is that the less steps that you skip, the faster you're going to be able to actually get good at doing this. Okay, so that's step number one. And sorry, last thing, in terms of how you do that, you can use a couple of my techniques. So for example, I talk a lot about looking at previous days, weeks, months, highs and lows. Okay, you can use order flow, any ICT technique you want to use. You don't have to use the ones that I use. Those are just the ones that I like to use majority of the time. Number two, okay, sounds simple, right? But a lot of people don't actually think about this. And that is develop the patience not to execute, okay? Develop the patience not to execute outside of these times. So for example, if there is no higher time frame daily expansion, okay, then don't go ahead and trade. And after this video, I'm actually going to show you, well, not after this video, but after I've showed you these 3 points, I'm going to go ahead and show you a chart example of me actually doing this, breaking this down on a trade that I took, and I'll probably show the execution as well. So anyway, with this, right, with this section, you need to actually identify the psychological factors which cause the issue here. So don't think about this from a surface level and just say, I'm just going to be patient. You know, like that doesn't do anything. You need to figure out, why are you not patient? Is it a lack of money? Is it a lack of funds? Is it do you feel like there's not enough trade setups for you to trade, right? And you then want to go ahead, write all these beliefs down and then turn them around. So for example, you want to say, okay, cool. What if I asked you, what is your average trade frequency, or not your average trade frequency? How often does your trade setup present? If you haven't logged the data, you're not going to know the answer to the question, right? If you go ahead and log all the potential setups that were there in a week, and you have like, I don't know, 10 weeks worth of data, you're going to know, okay, cool, I've got 2 or 3 shots this week, okay, on average. So with that being said, right, that immediately gets rid of the sort of anxiety and leans you more towards that patient side, because if you already know based on data that you have 2 to 3 potential setups in this following week, you're not going to be worried about leaving a trade on the table, if that makes sense. Okay, so you really want to knuckle down on the psychological aspect. Maybe you're a very greedy person and you want to catch every trade, and maybe you're setting too high of an expectation. You're saying, look, I need to catch every single trade, and if I'm not in every single trade, then I'm a failure. Okay, so with this, a lot of the time it's going to be some sort of deep-rooted psychological issue that you need to go ahead and dive into. Okay, you need to really go ahead and try and understand exactly what you're doing wrong here. And number three, once you are good at forecasting these high probability expansions, you want to go ahead and create a system slash rule set around trading these high probability expansions. So for me, this is where my daily cycles come into play. So for example, if I know that the daily candle is going to look something like this, and one word I actually missed here is the word simple. Yeah, you want to keep things simple. So for example, I have a cycle along the lines of London protraction, right? So that would be me trying to catch a trade inside of London, waiting for certain parameters to get hit, and then watching certain highs and lows getting made at certain times, and then looking to catch what most likely is going to be low of day, okay? And then maybe New York's going to offer me another cycle which will allow me to potentially catch a continuation in that session. So couple ways that you can go about doing this. You could adopt a intraday sort of methodology like the daily cycles, or you can keep it so simple and you can just trade the hourly or the 4-hour chart. So for example, that was poorly drawn. You could just say to yourself, all right, cool, once we get a market like let's say a CSD, so we get a CSD here at the bottom of the chart. Let's even say 15 minutes or so we get a CSD on the 15-minute, and you're like, cool, whenever we get a retracement into an OTE, I know I'm drawing on such a small part of the screen right now, but let's say you get a CSD into an OTE and then a CSD, then you could potentially go ahead and trade that retracement. You know what, let me just redraw this because this is so bad. There we go. So you get the CSD, you get the OT, and you just trade the OT and you trade the expansion. Okay, very simple. And you know the day is going to look something like this. So you're looking to get in, I don't know, underneath the midnight open, for example, and you're looking to capitalize based on, I don't know, the average daily range of 5 days if you wanted to do something like that. But the point is, create a system, create a rule set, okay, and use that your knowledge of the high probability expansion, okay, knowing that when this day is going to print, and then just get on site. Don't overcomplicate it. So like I said, if you're bullish, wait for X, Y, and Z, go ahead, enter, and then capitalize on that move. Okay, so I'm going to show you how exactly I do this with these 3 simple steps, and this is me basically showing you, like, look, this is exactly what I do. So I'm going to do the top-down analysis for you, and I'll show you exactly what I was looking at for this trade. So on the monthly, okay, this hadn't printed yet. The monthly was down here, and it was the final week of the month, so I wanted to see this week go ahead and create the lower wick of the candles. That was just using a monthly power of 3 logic. Okay, we'd went ahead, swept out an old low, and yeah, so I know, right, the market only ever does 2 things. It's either going to trade to liquidity or trade to fair value. Okay, so my draw at the time, basically this candle wasn't visible, right? So it looks something like this. So I wanted to see, okay, I wasn't 100%, but I was contemplating the idea that price would now want to trade towards this FEG potentially. However, I wasn't fully fixed at this point in time. I wanted to see if the daily could tip its hand, basically show some sort of rejection away from this area, maybe a swing point, maybe just strong closures away, to really actually give me confidence that we were going to go and trade at this level. So as the week started off on a Friday, I was not confident in that. Okay, we were still trading, we were respecting bearish arrays. So this is me basically identifying order flow, and we were still showing that we were bearish, which is not helpful. So let's see what happened. The next following day, right, Monday, we'd created a swing point, and I actually noticed we had some SMT between DXY, okay, and EU here. So I don't know if that's visible there, but look, on this pair, we went ahead, swept out a high. EU had gone ahead and formed SMT at the bottom there. So we had SMT, and we had a bullish closure on the daily. And one interesting thing you're actually going to see with the setup is that the bias on the week was right, but on the day specifically was not actually 100% correct, but I was still able to capitalize and make money out of the market, which is another key thing, sort of just to understand. But anyway, so we go on the 4-hour. We have this high up here, okay, and we have equal highs here. In terms of a buy and sell program, which is how I use, or what I use personally, I understood that we'd shifted from that sell to that buy program. There was a little bit of discrepancy around this area, so I wasn't 100% sure in the program. However, what I was sure of was if we rejected this 4-hour level, okay, because technically speaking, we were respecting both bearish array and bullish array, and also this was high resistance liquidity. So basically what I said to myself was if we go tap this level and start rejecting away, showing displacement, then I will lock in and look for, as long as it aligns with one of my daily cycles, then I will look to trade that move. Okay, so if I go on the 15-minute here, you can see, let's just play along. So this is Asia, that's that blue zone, right? Asia comes and taps into the 4-hour BISI, which is, well, we're not interested in that because it's out of session timing, or out of the key session timing that I'm actually going to trade, right? So we wait for London. Okay, so London kicks in, okay, sweeps. There we go. All right, big strong bullish closure to the upside. Okay, for me that was enough. Okay, so after we had the sweep, the aggressive sweep to the downside, and then the push higher, also with this market structure shift right here, and the fact that we had built liquidity overnight. So this was my ideal target. This was sort of like an intermediary style target. We had the market structure shift, FEG. I actually entered after the market structure shift. SL was at liquidity. I'm just going to delete the risk reward tool as it's easier to follow along. But yeah, pretty much we went ahead. We rejected away. So we didn't respect the M5 FEG that nicely. We then went ahead, showed some even more, or sort of just a stronger move to the upside. Okay, after that we formed another FEG. Right, that got respected. Again, still holding through. And then we end up getting some nice movement to the upside, right? So I didn't take profit here. Typically, right, I have a very set time window where I'll take profit, and it will either be a time-based TP or it will be based on sort of price and time target. So I'm always trying to blend the idea of price and time together. And that's why, for me, the daily cycles work really well, because I know what time I want to see the low of the session get made. I know what my execution timing windows are. And I know, based on time, right, and price, where or what time I'm looking to get out of the market. So I'm still in at this point. Price starts rocketing higher, and then price is reaching now this area, right? This inside of this area, I'm now looking to actually exit out of my trade based on time. Okay, so I actually go ahead and exit 80% of my trade here. You know what, I'm not actually going to edit this in. So basically I posted this to Instagram. It will be in the highlight section of, I think it's called My Journey. I'll just put it there. So basically I posted this was a trade I took on Tuesday. So you can see that if you want to see the proof of the execution, you can see it there. Wherever, I don't think I've posted it anywhere else, but yeah, it'll be there. I took 80% off here. Okay, at that point I did leave 20% on. I wasn't anticipating this to get hit, and to be honest, I was expecting this to go and reach for this high and then potentially that high, depending on how we interact with this high. What you can see, and this is why I have this sort of time-based TP logic, right, is we go ahead and we run lower. Okay, so based on my rule set, I was able to capitalize on this, get out in profit, whilst being able to actually be wrong on the session, right? So if I just play this along now, Okay, we actually run a lot lower, right? We went ahead, reached out a low, and then if I play price a bit more, okay, so it's pretty much I had the right bias, but it was just too early. So what does that mean? Well, what actually happened is that we actually just formed SMT, even well, again, pretty much with DXY. So DXY had made equal highs here, and these equal highs got raided out with this purge versus EU, where it had these two lows here. It raided out one of them, failed to raid out the second one, so that's SMT. And then that high, which was my target, which was, sorry, this one and this one, instead of price going for them in London on the Tuesday, which is what I was anticipating, it went ahead and raided them the next day during London, which is actually something I called inside of my Discord as well. So yeah, pretty much. You know, it's not there either. So yeah, pretty much. If I just put this there and there, as you can see, I looked for, or I was anticipating this day to be bullish by a day, and I was actually wrong. But following my daily cycles, I was able to then capitalize, get in at the key time, get out at the key time. Even though technically speaking bias was wrong, I still again profited in this example. If I'll play you one more, which was another one I thought was really clean, but I don't trade the Thursday of NFP, which is why I wasn't able to capitalize on this. This is also another one that I called inside of Discord. You can see this posted in the free Discord under the tape reading recap video, where I basically forwarded my analysis from the premium outlook. So remember, this was the draw that weekly FEG, as I mentioned at the start of the video. We actually went ahead and made equal highs with this level. So on EU, on the hourly, I mentioned this breaker. Oh no, I didn't mention. Oh, sorry. Okay, I've ruined this now. This is wrong. Sorry. So sorry. On the daily, after this candle had printed, I called this level. So on the daily, we'd gone ahead. We'd formed the SMT with the low, and so I was looking for this following daily candle to go ahead and reach higher. So the Wednesday candle, and it was from this breaker. Sorry. So that's what's called out in the Discord. It's basically from this breaker level, and I was looking for these two highs to get pierced. And as you can see, if we play that along, right, we go ahead during that London session and we raid those out very, very, very nicely. Okay, so let's just fast forward that day like that, and let's just see what happened on Thursday as well. For some reason, I just can't even remember right now what this looks like. Oh yeah, I remember. Cool. So with this one, I didn't call this out anyway, so I'm not going to claim I called this out. But just as another example, we're looking for this day to expand higher, yeah, because the draw on liquidity is this weekly FEG. I've just ruined it, but yeah, this would have been a high probability expansion on the daily. In terms of areas that we could have looked to long from, you've got this order block, but you've also got this inversion gap here. Price then goes ahead, okay, taps that level. Asia creates the low. Okay, we get a CSD or breaker block formed. Plus fair value gap. Now, I don't trade the day before NFP, right? So I was literally just watching this price action, but it's beautiful. Very, very, very clean. Yeah. And then high gets reached for. Okay. So yeah, just a little breakdown, trying to show you the lens of the market. The market through the lens of sort of my eye. And yeah, hope you guys got some value out of that. Like I said, those 3 steps are all you really need to focus on. Do not get caught up in all the just rubbish online, man. Like, honestly, just keep it simple. Keep your strategy simple. Those 3 points, like I said, game changer, right? Document, make sure you evaluate all your psychology and all that good stuff. So yeah, hope you guys enjoyed that, and I'll see you lot in the next one.